Will Clark, who is Head of Business Development at Guinness Ventures. Guinness are another relatively new VCT, and they also have sort of an interesting strategy.
Thank you, Brian. Hopefully you can see the slides. Just gonna make sure I can see them slides. Good morning, good afternoon, everyone. Thank you very much for taking the time to join the session. Pleasure to be here representing the Guinness Ventures business and the Guinness VCT. As a business, our aim is to provide investors, advisors access to early stage growth businesses in the UK. And we do that alongside EIS, Enterprise Investment Scheme, but also VCT. So I'm going to be talking today about Venture Capital Trust, the Guinness VCT. I've got 10 minutes for the prepared slides, and my aim with that is hopefully for you to leave this session with, firstly, a good feel for our investment strategy. Secondly, a good feel for the progress we've made since launching. So we are a relatively new VCT, which I'll touch on, but we feel like we've hit the ground running. So I'm going to talk through the progress we've made. And then finally, yes, I want to give you some reasons why to think about Guinness and our proposition when allocating to VCT in the current tax year. Before I move on, really important risk and performance notes, which are specific to early stage investing, which comes with significant risk, not least around liquidity. Just a little bit of background on us as a business. So Guinness Ventures sits as part of a broader, larger business called Guinness Asset Management. We're an appointed rep of that business. And the bulk of our group AUM actually sits under the banner of Guinness Global Investors, which is a long-only equity fund management business. And that manages around 8 billion for investors. We do plug into things like group compliance, finance, etc., and we certainly benefit from being part of a larger group. But given the nature of our investments, we have our own investment team, investment approach, etc. In terms of our sort of track record within early stage, so we've been investing in early stage growth companies for a long time through the Guinness EIS, and we're very close to having invested 300 million into early stage businesses via the Guinness EIS. Lots of exits, so over 100 million returned to investors via our EIS portfolio. That gave us the confidence, the prompt to sort of launch the Guinness VCT, which we did. We actually launched the first offer in Q1 22 before listing in Q1 23. So we're just over 3 years old, so relatively new. But as I say, I'll talk to the progress we've made in that period. In terms of our strategy, and this actually is shared, the VCT and the Guinness EIS. We participate in Series A investment rounds. So broadly, the investable universe for qualifying opportunities within VCTs would broadly fit within seed and Series A. Occasionally, we might see some deals that are slightly later on, but broadly, it's seed and Series A. So really, the options available for us would be to invest in seed, invest in Series A, or to invest in a combination of those. Our preference is scale up, so Series A. So we participate in that round. We filter for companies with at least £1 million of revenue. And just to give you a feel for that, so we've made 10 investments over the last 12 months. And on average, those companies were turning over just over 5 million. So by no means huge businesses, and certainly not bulletproof, but what we like is the fact that they're partway through their growth journey. They've been able to demonstrate a degree of product market fit. They've got customers prepared to pay for what they're doing as a product service. So we like entering at that point. Also, we're investment managers, and we want to, where possible, act on evidence. And going in at Series A gives us the opportunity to delve a little bit more into data, particularly around revenue. So we can look at things like revenue growth, which is a key metric that we'll look at, customers won, churn rates, etc., cost of growing revenue. So there's just a little bit more that we can due diligence as managers. A little bit more on our strategy. So we're based in London. We've invested across the English region, Scotland, Northern Ireland. We don't have a particular regional remit. In essence, we're looking to invest in the best possible businesses wherever they happen to be. We are generalist in our approach, but we do have 3 core sectors that we focus our attention on, and that's sort of where our portfolio sits. First is business productivity, business services, which is software. So software as a service companies, B2B type platforms. Secondly is consumer, so consumer brands and products. And then finally, healthcare. So we invest across those sectors. We think different sectors have different attributes. So we're looking to build sector diversification within the VCT. I mentioned the revenue. We tend to invest as a business about 2.5–3 million into a new business, and that would be split between the EIS and the VCT. So pretty sizable commitment that we're making. And in terms of the progress we've made, so sort of it was alluded to earlier, it is quite daunting launching a new VCT. There's significant barriers to entry, and fundraising can be a challenge. So the whole premise of launching was that we'd be plugging into the existing deal flow that we have as a ventures business, and it's been very pleasing that that's come to pass. So we've been able to scale the VCT very quickly in terms of portfolio. So 22 companies already within the portfolio, 10 added over the last year. Very confident that we'll be adding to that significantly before tax year end as well. So already building a sort of nicely diversified portfolio. In terms of that portfolio, more than 50% of those companies are growing their revenue by more than 50%. Really pleased to have also achieved our first partial exit in April this year from a company called Plotbox, which I'll talk to a little bit more shortly. And I mentioned the average revenue point. Overall, we're really pleased with the progress we've made, and I think we're nicely positioned for the current offer, which is our fourth offer, which I think has a good chance of sort of turbocharging our AUM within the VCT. So a bit more on that. So we've been open for a little while now. So we launched in mid-September. The offer covers the current tax year and next. We're looking to raise 10 million plus 5. We've got a relatively aggressive early investment incentive, which tapers down over time. The maximum early investment incentive has actually already expired, so there was a 3% discount to initial fee. But we're still at the 2% level, so pretty attractive until the end of the calendar year. And we also have an additional discount for existing Guinness VCT investors. So dividend is obviously a really important part of the VCT mix and sort of a key driver for inflows within the space. A feature, and I suppose not a positive feature of a new VCT, is that you're not typically able to pay a dividend immediately. So we haven't yet paid a dividend, but we're really pleased that the board of the Guinness VCT have announced that they intend to announce a formal dividend to be paid in April 26. So that should be our first, and I think that kind of puts us in a different category, and hopefully, as I say, will mean that this offer is larger in size than our previous 3. And just a little bit more about that. So any investor that sort of applies and is funded by the deadline for the current tax year, so 25-26, which is likely to be the 1st of April, should be in receipt of the first dividend in April as well. So portfolio-wise, so yeah, as I mentioned, so 22 companies there. You can see the spread, all of which are co-investments with the Guinness EIS. So any company that passes through our investment committee and process is available for investment via both the Guinness EIS and the Guinness VCT, all things being equal. So there will be some allocations decisions made between the two. So there's some relatively new companies to Guinness, but also, so if I pick out names like Aptem, we first invested in that business in 2018, and Baby Mori, for example, which is sort of high-end baby clothes, turning over about 20 million. We first invested in 2019. So businesses we know very well that we've been able to back via the Guinness EIS, sorry, the Guinness VCT as well as the Guinness EIS. In terms of sector split, so yeah, nice split between our sort of three core areas of focus. That will move over time, but broadly we're looking to achieve a good level of diversification between those 3 areas. Just to give you a few examples, and I'll sort of whiz through these, slightly conscious of time. Risk is an insurance tech business, so would fit within our software section of the market, and in essence it sits between car brands and insurance companies, and it enables the car brand to offer branded insurance at the point of sale and at other points during the lifetime of ownership. The strength really is, I mean, for the car brand, it's additional revenue. For the insurance company, of course, also revenue, But in effect, it's allowing the car brand to do their sales and marketing for them, and consumers have a much stronger pull towards a car brand versus an insurance company, for example. Next one, consumer business. So within our consumer sector, eco deodorant, really interesting business, probably one of our most well-known portfolio companies, partly because they're on Dragon's Den and they received some funding on Dragon's Den, but also they're really good at their advertising, so they're out there. First backed this business in the 23-24 tax year, turning over close to 6 million. They're very close to a 20 million revenue for the current year, so really flying in terms of their revenue growth. Finally, Plotbox. I referenced this earlier because we partially exited this holding. Software business based in Northern Ireland, and quite an interesting sector that they cover. And it's called Death Tech is the sector, and their clients are cemeteries and crematorium businesses, both in the UK and the US. And their sort of expansion into the US got the attention of a US smallish PE firm that made a sizable investment, so $20 million into Plotbox in April this year. And to facilitate that, we sold down 20% of our holding at 2x. So that's really great to have our first exit within the VCT. Just going to close on just some thoughts around valuations, and I sort of will bring this back to the Guinness VCT. And what we're showing here is a basket of 70 listed software companies and their revenue to value multiple over time. And sort of the valuations during COVID have been, widely reported. A lot of people read up about them. They're extremely high during that period. Lower interest rate environment, a lot of sort of hot money coming into the software sector. But you could probably overlay this type of graph on most sectors within growth. What we have seen subsequently is a recorrection, rebasing, whatever you like to call it. I bring this up because all of the Guinness VCT's investments have been made since Q1 23. So we're quite happy with the entry point that we've been backing these businesses. Clearly not a guarantee of success, but I think we're quite happy with valuation multiples that we've been able to achieve within the portfolio. So that's the prepared slides that I have. So very happy to answer any questions.
Yes, thank you for that. I think you've answered one of the questions, which was regarding the dividends, about when they're going to start, when Guinness VCT is going to start paying. Are you able to shed any light on roughly how much that would be, and is that going to be split over into 2 dividend payments over the year?
Yeah, and I can't give details, but we're expecting to have the details announced in early 26, so January, sort of early part of January. I think there's a good chance it could be split. So I think we're targeting 5%. Hopefully we can achieve that next year, but I think if we do that, it would be split between an April payment and perhaps a payment in summer, late summer, something like that.
That makes sense. And then from the same person, actually, the question, I guess, given there's a lot of co-investment with the EIS as a kind of indicator, what failure rates have you seen within the Guinness EIS?
Yeah, good question. So we're currently, so the Guinness EIS in terms of the growth portfolio has invested in 61 businesses, and failure rates around 16-17% currently. If anything, I'd probably indicate that may move up, but that's kind of where we sit at currently.
Perfect. And then finally, I guess, given there's a lot of established VCTs out there, and we've been speaking to a couple of the managers here today, and Paul to come, why would an advisor or an investor anyway pick a newcomer VCT like Guinness? What's the kind of selling point?
Yeah, really good question. So a couple of things. I think there's probably 3 key reasons that we've had support, and hopefully we'll continue to have good support in the current offer. Number one is investors and advisors that sort of know us through our work within the Guinness EIS. They like our track record, like our approach, etc. So that's one. Number 2, and probably the most important, is around diversification. So a lot of advisors and investors will allocate to VCT every year. There's not a huge pool of managers out there, so I think a new VCT is interesting in terms of accessing a new manager, new portfolio of underlying companies. So I think that's certainly where we've seen some traction. And then finally, I would probably come back to that valuations point. So certainly investors and advisors have flagged that with us. So they like the fact that we've been active only since 2023 Q1. So hopefully coming in at a sort of a good entry point. So that's been flagged as well.
What is your typical percentage holding in a company in the VCT? And then also, how do you expect AI to impact SaaS models?
Yeah, so percentage. So all of the businesses have co-investments with the EIS. So so I'll answer that sort of as Guinness Ventures. So we tend to have a sort of 10-15% ownership equity of a business. It can be outside of that parameter, but broadly. And then AI, yeah. So we look to, there's an expression we use internally called real world businesses, and we do certainly have sort of AI focused businesses, certainly within our software, so one of the three sectors that we cover. But we like to, which is one of the reasons we like consumer. So we like bringing in some businesses that aren't necessarily AI deep tech focused to offer some diversification. But as you'll have seen earlier, software is the largest section within the VCT and across our portfolio. And certainly within those, there's some sort of pretty AI focused businesses within that.
Thank you very much, everybody, and we'll see you next time.